Central banks, you hear about them all the time. They are, without a doubt, some of the most powerful institutions on the planet, and they shape our economies in ways we feel every single day. But how do they actually work? Well, consider this your official study guide. We're going to break it all down.
All right, so here's our game plan. We've got 5 key sections. We'll start with the who, then get into the why and the how of managing an economy. After that, we'll look at another major player, the government. And finally, we'll explore a completely different economic framework. Ready?
Okay, first things first. Who is this major player on the economic stage we keep talking about? Let's get into it.
So, at its core, a central bank is the top dog in a country's financial world. It sits at the very, very top of the banking and money pyramid. It's a government agency, yes, but it's also the most critical financial institution there is. And what does it actually do? Well, a whole lot. Think of it as the government's personal banker and its chief financial advisor. Its job is to keep the country's money stable, make sure the financial system is healthy, manage government debt, and hold on to a big pile of cash reserves to protect the currency. It is a massive, massive job. All right, moving on to Chapter 2. With all those huge responsibilities, what's the number one goal? What's the why behind all of this activity? Turns out, it all comes down to one key idea: achieving price stability. Now, to get what price stability is, you first have to understand its 2 main enemies. Enemy number 1 is inflation. You've definitely felt this. It's when your money just doesn't go as far as it used to because the average price of everything, from your coffee to your car, is going up. And on the flip side, you've got enemy number 2, deflation. This is the opposite problem, where prices are actually falling. Now, that might sound pretty good, right? Cheaper stuff. But it can be just as bad for an economy, because if everyone expects prices to be lower tomorrow, they stop spending today. And this is exactly where the central bank wants to be. Price stability is that sweet spot, that perfect balance right on the line between the chaos of rising prices and the drag of falling prices. Nailing this is the foundation for healthy, sustainable economic growth. So why is this such a huge deal? Well, when inflation gets out of control, it basically eats away at the value of your savings and your paycheck. It makes it really hard for businesses to plan for the future, and it creates all sorts of headaches for the government. That's why fighting it is always, always at the top of the to-do list. Okay, so we know who the central bank is, and we know what its main goal is. But how does it actually do it? How does it maintain that price stability? That brings us to our next chapter, its primary toolkit, something called monetary policy. Monetary policy is basically the central bank's action plan. It's the set of tools and levers it pulls to control how much money and credit is flowing through the economy. And it's all done with the aim of hitting those big national goals, like making sure prices are stable and people have jobs. Now, the main tool in that kit is something called open market operations. It sounds complicated, but it's really about buying and selling government securities, which are just IOUs from the government. So look at this. When the central bank buys these securities, it's pumping cash into the banking system. That makes it easier for banks to give out loans, and interest rates tend to fall, which encourages everyone to spend. But if the economy is running too hot, it does the opposite. It sells securities, which pulls money out of the system. That makes loans harder to get, and interest rates go up, slowing everything down. It's literally the gas pedal and the brake for the entire economy. But wait. The central bank isn't the only one driving the car. The government itself has its own powerful set of tools, and you need to understand them to see the whole picture. So let's talk about the what else in the economy: fiscal policy. Fiscal policy is actually pretty straightforward. It's all about 2 things: how much the government spends and how much it collects in taxes. That's it. While the central bank is managing the money supply, the government is deciding what to tax and where to spend that cash. And those decisions lead to one of 2 things. If the government spends more money than it brings in through taxes, it runs a budget deficit. But if it brings in more tax money than it spends, it runs a budget surplus. And believe me, whether it's a deficit or a surplus has a huge impact on the economy. So, almost everything we've talked about so far is part of the dominant economic model, which is built around interest rates. But you know what? That's not the only way to do things. For our last chapter, let's look at a fundamentally different approach: the Islamic economy. This quote right here gets straight to the point. The single most important, most defining feature of this economic model is getting rid of interest entirely. And that, as you can imagine, changes the whole foundation of how you run an economy. Just look at the goals here.
Yeah, there's some overlap, like full employment, but there's also a really strong focus on human welfare and justice. Things like guaranteeing everyone's basic needs are met and making sure wealth is distributed fairly. It's a different set of priorities.
So, if you can't use interest rates, what's in the toolkit? Well, you get a whole different set of instruments. Instead of tweaking a central interest rate, this system uses tools like profit-sharing ratios, rules on lending, and even something called moral suasion, which is basically using influence and persuasion to guide the economy.
And that leaves us with a pretty big question to think about. From the interest rate decisions that affect your mortgage to the justice-focused goals of a completely different model, these economic philosophies are not just theories in a textbook. They are powerful forces that build the world around us. So the real question is, how do they shape the world you live in every single day?